morning. Welcome to Wednesday. I'm Mike from Markets. This is Kiwibank Markets in a minute. This is, hopefully this doesn't run too long this morning. Straight into it. There was a lot going on overnight, and it wasn't necessarily straightforward, and there was a lot of asset class intersection. Let's see how we go. Yeah. Okay, bare bones basics. The US dollar, it was in vogue overnight for a while. And that prompted the New Zealand dollar to fall out of favour, more than a cent out of favour. So yesterday morning we scratched 65.8 US cents up here, and overnight we scraped 64.69 US cents. It's way down here. Yeah, we've rebounded a bit from that low, sitting just above 65 cents at just after 7 a.m. Yeah. Okay, so far so good. Bigger currency picture, the US dollar index did well out of the overnight blocks, but slipped a little as the evening wore on, finishing kind of middle of the road. Yen was actually the big winner of the past 24 hours. I think that's 2 from 2 for the yen. Go yen. Anyway, the moral of the story from a Kiwi perspective, the best perspective, is we will start the Kiwi-Aussie day more or less where we finished yesterday in the mid-93s, but the other major Kiwi crosses are all kicking off from a lower starting position this morning. First hand tables, Matt, he'll do those for us. Yeah, handy. Okay, so just coming back to the Aussie, it also suffered at the hands of a surging US dollar overnight. Actually hit a little harder than the Kiwi, and that pushed the Kiwi-Aussie to a fleeting overnight high of 63.99 Aussie cents. So plenty of volatility, even if from dinner time to breakfast time, the numbers were broadly unchanged. Okay, equity markets for the most part, varying degrees off the pace, and that's despite some positive price action in industrial commodities. Yeah, that sort of action usually supports equity prices. Let's do that so we keep something fun in the background. It didn't overnight. To be fair, the tech-heavy NASDAQ, that did well. It's still in the green, but everything else, just heavy, yeah, as far as stocks go. Incredible rally in stock markets in recent weeks, so breather is understandable, but there is a fair bit of market chatter around US dollar derivatives as a driver of the negativity overnight. So, basically, data overnight highlighted that US dollar bullish option positions have surged to their highest level in 20 years. Basically, everyone is buying US dollar calls. So that's a right, but not the obligation to buy US dollars at a specified future date, at a specified future rate. You pay a premium for that. And the reason a participant might want to do that is they believe when that option matures, the market rate will be above their specified rate, so they can buy low and sell high. Yeah, that's a very quick overview of options. There's a whole lot of other stuff that goes around with it. Maths, some calculus, Greeks. It doesn't matter. What matters to the market is historically, periods of ultra bullish US dollar option positioning have been followed by declines in equity markets. Is this time different? Maybe. Who knows? I mean, we will eventually, but we don't know today. But what we do know today is that positioning is possibly having an impact on equity price action and, by extension, the New Zealand dollar, both through US dollar strength because of more potential buying interest and because the Kiwi tends to follow equity market trends. Yeah, there we go. Brought it all home. Okay, day ahead. China inflation data today, US inflation data tonight, and probably some other headlines or semi-complex concepts that I have to stumble my way through in a video tomorrow morning. There's always something. Yeah, right, that is more than enough from me, I think. Have a happy Wednesday. Call your dealer if you want to learn more about options. Fun. Okay, kia pai, till